Hey guys, how's it going? Let's turn on the camera. Here we go. There we go. Everything works out the way it's meant to be. Okay, cool. So, like I was saying, we got an exciting session for tonight. This is going to be a session that is focused specifically on understanding order blocks, and we're going to be doing some market outlook as well. Thought we were going to be doing it without a face cam, but here we are with the face cam. So feeling good, feeling good. But like I said, if you have questions throughout the session, definitely go ahead and just drop them in the Q&A box on the ECA screen, and I'll be happy to answer any questions that I can as I'm going through the motions here. So the first little bit, we are going to be doing an in-depth training on order blocks, and before we do, there's a couple different words that are going to be necessary to have for a point of reference. And for those of you that are taking notes, which should be everybody that's on these calls, make sure that you are drawing out, not just taking pictures, but drawing out the diagrams and examples that we're going to be going over for each of the types of order blocks. And this will allow you to further establish and solidify the foundation in terms of your neural pathways in the mind. And maybe it sounds kind of crazy, but neural pathways are essentially paths that you have established and that are kind of etched in stone over time in the mind, where your body and you just visually are able to recognize and acknowledge certain things. And the more that these neural pathways are traveled down, the more solidified different concepts and different habits are. So if we think about brushing our teeth, for example, the first time that you brush your teeth, you're like kind of awkward holding your toothbrush. You don't really know what you're doing. And then eventually over time, after you're doing it consistently, the neural pathways, or basically your mind, is familiarizing itself with the physical movements and what's necessary to brush your teeth. Once that's established, you can do it with your eyes closed and not even thinking about it. So with the charts, obviously everything is pretty visual. We're looking at technical analysis, we're looking at charts, we're doing markup, so on and so forth. But to create those physical neural pathways, in that you're writing with a pen or a pencil, ideally a blue pen, right? White paper, blue ink. This is a cheat code. White paper, blue ink. You're actually going to retain more of the notes that you take, and as well as the diagrams that you're drawing. There's scientific, backed evidence to this. I'm not just pulling this out of my hat. Okay, it's the real deal. So I'm just sharing with you guys what I did when I was first learning this stuff. But before we dive into the diagrams, let's talk about the vocabulary that's necessary for today. So we'll go today's vocabulary. All right. So we're going to be talking about order blocks. We're going to be kind of bringing back that conversation that we had the very first market maker method training, which was understanding mitigation. And we also are going to be talking about, just give me a second, you guys, to turn my phone on do not disturb. Shout out to the Apple Watch one time. Okay, cool. It's just convenient, just do it from your watch. It's pretty cool. Okay, we're also going to be talking about remorse. So buyers and sellers remorse. We're going to be talking about this, breaker blocks, and then mitigation blocks. Okay, so these are all different terms that we're going to be referring to throughout the session. So just write these down. We're going to come back to these. We're going to basically paint a picture with each of them throughout today's session before we dive into the market outlook. So the intention behind this training is for it to be maybe 10 minutes spent on each of the different types of blocks. So regular order blocks, breaker blocks. This is supposed to be breaker. Let me fix that, right? Like breaker blocks, mitigation blocks. And then remorse, buyer's remorse, seller's remorse. This is a synonymous term for breaker blocks. So sometimes there's verbiage that is used synonymously by different traders, different analysts, referring to the same thing. Okay, so we're going to be talking about each of these in detail. We're going to do visual diagrams of like us just drawing on TradingView, and then we're going to actually look at some real examples and also some examples of what I'm actually looking for in real time for this week in terms of technical analysis. So without further ado, let's go ahead and dive into it, and let's define first thing that we have on screen here, which is order blocks. Okay, order blocks, simply put, are areas in the market where the institutions have positioned themselves. So the very first session that we talked about market maker methods and smart money concepts, we went over the fact that the institutions have to position themselves in a different way than retail traders just because of how much capital they're trading with. They can't just casually go ahead and press buy or sell whenever they like. They have to hedge their way into the market. They have to sell to buy, and they have to buy to sell. So an order block, if we were to understand this in terms of what we'd be looking for in the chart, is we'd be looking for any sort of, single or consecutive down candles prior to a major up move. All right, which these would be examples of bearish order blocks. Okay, so we can see, with the diagram that I have on screen here, price is creating, lower lows and lower highs. We then see a market structure shift. We then have a last down candle prior to this up move. That would be considered an order block. We understand that typically the market will, trend and create higher highs and higher lows. And typically at each of these higher low points, there are order blocks present. Okay, this also down here would be an example of an order block as well. Right, there's typically going to be, one last down candle prior to this push higher, or consecutive down close candles prior to the up move, prior to the reversal. Same thing could be said with taking into consideration the inverse. All right, if we have a bearish environment, right, you got those last up candles prior to down moves. All right, and then these would be examples of order blocks as well. Right, last up candle before a down move, last consecutive up close candles prior to an engulfing down move. In a bearish environment, you'd be looking for those as order blocks as well. Now, one thing that we talked about the very first market maker methods session was the significance behind liquidity captures with order blocks. And the cool thing with just about everything that we have on screen here with the vocabulary and what we're going to be talking about on today's session is that the best order blocks, the best breaker blocks, the best mitigation blocks are happening in areas where liquidity has already been captured, or they're actually the catalyst to capture liquidity. So what do I mean by that? Well, if we have an area where there are relatively equal lows, and then we see price do a sell to buy motion, this order block down here, that last down candle or those consecutive down candles, depending on what time frame you're looking at, is going to hold more weight than this example of an order block, which is just the last down candle before an up move that didn't capture liquidity. Now, maybe this last down candle came into a point of interest to the left, like a fair value gap or something like that. But the order blocks that are going to be the most significant are the ones that are capturing liquidity. Liquidity, simply put, is just relatively equal highs, relatively equal lows, or points where typically there are going to be retail trader stop losses being captured. Okay, so this by definition is kind of the basic order block. Now, to take it a step further, these are obviously a few diagrams that we've drawn out, and we have kind of referred to these already as of the very beginning of these market maker method sessions, but I did want to just go over them again in more detail. If we were to pull up some examples, okay, we got the spoiler alert here again with the breaker blocks. But if we were to take a look at golds last week, all right, gold had a prime example, and we actually ended up marking up pretty nice sells on gold last week on Thursday's session. So congrats to any of you that were able to capitalize on that movement. It literally came into the entry area that we were looking at 5 minutes after we ended the stream. So if we were on right until 11 a.m. Eastern, we actually probably could have caught that trade altogether live. For those of you that were there, it ended up playing out beautifully. So congrats to anybody that ended up catching that sell, because this thing melted, absolutely melted. But if we take a look in the replay mode here on gold, this is the hourly time frame. We can see that we have overall, bullish momentum, right? Price is creating higher highs and higher lows. We then see a market structure shift, right? A change of character, sometimes referred to as a change of character. And the order block that would be present here would be, we technically have these 3 consecutive up close candles, which you could be considering as a block of buy orders that institutional algorithms are ultimately positioning themselves in prior to entering sells to drive the market lower. But in this case, I'm only really going to be focused on the last up close candle here, because it was that last up close candle that ended up coming and capturing this liquidity. All right. Anybody that was selling prematurely, and this was, I believe this was on, this was Wednesday, Tuesday and Wednesday, highs to the upside, right? Liquidity to the upside ends up getting captured by that last up candle prior to a significant and engulfing down move. And of course, there was also a market structure shift here too, coming and taking out this low. Okay. So this right here would be a point of interest. It would be an order block that we would be looking to see price return into for shorts. Okay. The thinking behind this is that here, the institutions have sacrificed capital. All right. So let's say it was 100,000 lot buy, 100,000 lot buys, make this a little bit smaller. Capturing liquidity. We understand that liquidity represents pending orders in the market where price hasn't necessarily come and traded above this high, hasn't traded above these highs, hasn't traded above these highs. We then see one aggressive push higher, which anybody that was taking sells would have had their stop losses above previous highs. And people that are selling are being forced to buy back their position. They're being forced to do the opposite of what they did to get into the trade when the trade is being closed. Sometimes it's a little bit tricky to wrap your head around, but if you are in a buy position on MetaTrader or a sell position on MetaTrader or any other trading platform for that matter, you have to do the opposite to close your trade when the time comes. So when stop losses are being triggered from sell positions, that's adding buy pressure to the market and therefore allowing for the institutions. So the institutions take, 100,000 lot buys, driving the market up into stop losses, adding to the buy pressure, which then allows them to go ahead and enter that bigger sell position, which was ultimately what they were looking to do. And this was kind of the catalyst for them to take that 1 million lot sell. Okay. Now, the thought process behind order blocks is that as the price is trending to the downside here, right, they take 1 million lot sells. They can't just casually take 1 million lot sells when price is at a high point. They have to manipulate liquidity. They have to take out traders. They have to capture stop losses and also bait entries as well. Because anybody that maybe didn't have an entry, but that had buy stops above this area, anticipating that, hey, if price breaks that level, we're going to continue higher. It's also baiting in buy stops as well to ultimately get that bigger sell position. But as price is trading to the downside, those buys that they temporarily sacrificed with that order block remain open. So price has to come back and mitigate this order block. And the definition of mitigation, just to pull this up, and we talked about this, like I said, the very first session where we talked about market maker methods back in the beginning of July 1st. Mitigation is the action of reducing, write this down if you haven't already written this down from a previous session, or even if you have, just to, spaced repetition is the key to all mastery and the mother of all skill. Feel free to write this down again. Mitigation, by definition, is the action of reducing the severity, seriousness, or painfulness of something. So imagine you take 100,000 lot buy. That 100,000 lot buy then goes hundreds of pips into drawdown. Instead of you closing 100,000 lot buy for millions of dollars of a loss, what the institutions will look to do is wait for price to come back to where they entered those buy positions to then allow for mitigation to take place. So instead of them taking those massive losses, they just close out for break even or potentially a little bit of profit as well, depending on where price comes into, instead of closing for a loss, as they have obviously a big position, which is going to be outweighing the losses that they would have taken anyways. It still doesn't make sense for the institutions to take a major and significant loss in the market. So that's kind of the thought process behind order blocks. Okay. And the word mitigation is very key. We're going to be coming back to this for just about every single one of the examples and the different types of order blocks here. So now this is an order block. Okay. So how do we take an entry based off of an order block? All right. Well, first things first, what gives us a high probability order block? All right. Well, number one, and maybe this is something to consider writing down, because I'm not going to write it down on screen, but it'll be good for your own notes, just for a point of reference. The most high quality entries out of order blocks are ones that capture liquidity and are the cause of ultimately an effect, which would be a market structure shift. All right, they're like the causing kind of catalyst behind movement that then creates a market structure shift. So literally what we're seeing on screen here, this is like a prime example. Okay, so taking upside liquidity, relatively equal highs are captured. There's that last up close candle prior to an engulfing down close candle. That's just a nice sign. We like to see that, but that in and of itself doesn't really mean a whole lot, other than the fact that there's some fair value gap or kind of imbalance that's left behind here as well. And then also importantly, we see a market structure shift. Okay, we went from a bullish environment where price is creating higher highs and higher lows to a market structure shift. Price just came and created a lower low. All right, so we have an order block, last up candle prior to the down move. And that down move, the low that we created, was a lower low, allowing for a market structure shift. Okay, or a reversal. So how would we take an entry based off this? All right, so we would look to enter when we have a full body candle like this, a full volume candle body, where we can basically see that the body is much bigger than the wicks, because the entry model will be different if it's not this case. And I'll show you guys an example in a second. What you're going to want to do when the candle body is looking nice like this, you're going to take horizontal ray, or however you want to mark it up, and you're going to mark up the open of that last up candle and the 50%, roughly the 50%. If you want to take a fib and be exact with it, you can. Right? For me, I'll usually just kind of eyeball it. But the open to 50%, this is kind of the zone where you would be anticipating price to retrace back into, allowing for that mitigation to take place for price to continue going lower. Okay. So maybe in this example, you take a sell, stop loss above these highs, because it wouldn't make sense for the million lot sell, or this is just an example, hypothetical example, but those major sells that the institutions are in, it doesn't make sense for them to go into drawdown. So stop loss would be above the high. And what could you target? Maybe you target the creation of a new low, 1 to 2 risk to reward. If you're entering off the open, if you're entering off, somewhere in between the open and the 50%, obviously that risk to reward is going to change. But then you also have that possibility of not getting filled or entered into the position. Sometimes we won't trade all the way to the 50%. So it's better to just kind of enter off the open of that order block. Okay. So if we play this out, we'll see that price comes and taps into that area during London session prior to, aggressively selling off. And this was, ultimately a really nice, entry based out of this order block. Now this is a last up candle before a down move. So this would be a bullish order block that we come and mitigate. And then price continues lower. And then inversely, if we were to kind of flip this over the other way, instead of going to, just out an effort to save time here, we would kind of be looking for the same thing inversely. Okay, you have last couple down candles or last down candle that captures relatively equal lows prior to a push higher, shifting market structure. Price retraces, we come back into that last down candle prior to the up move. That would be an entry opportunity out of that order block. Okay, I'll show you guys some other examples for, if we have enough time, we'll go into like some more examples of specifically this type of entry. But we have talked about this pretty frequently on the sessions, maybe just not in as much detail as we have today. But this is the first type of order block that we like to look at. The second type of order block that we like to look at is what's referred to as breaker blocks. Now, this is a brand new material. We haven't taught on either of these two things, breaker blocks or mitigation blocks. So maybe for those of you that have been kind of veterans on these sessions, you're familiar with order blocks, and this is kind of just spaced repetition. It's kind of supporting you and reaffirming what you already know. Breaker blocks and mitigation blocks, we haven't actually gone over before. So this is kind of where the new material is going to come into play for this session. So what I'm going to do really quickly, I'm just going to pull this up. Shout out to those of you that are on here that have come in since we started the session. I'm just going to pull this up quickly, and we're going to go over breaker blocks, because this is honestly one of my favorite entry models. Is looking to take a position off of a breaker block. And so let me just go ahead and figure out how I can pull this up here. Okay, that's looking good. So a breaker block, simply put, write this down in your notes. A breaker block is simply put a failed order block. All right, so if I share my screen again here, if we pull this up, okay, let's just say that, for example, this order block, which we're identifying as an order block, last up candle before a down move, let's say that instead of us rejecting out of that area, we end up trading all the way through it. How many of you who have maybe traded smart money or market maker methods before, previously you've been doing this for a while? How many of you have experienced, okay, cool, here's a last up candle before a down move, last down candle before an up move, order blocks, institutional candles. Sometimes we refer to them as like FU candles because they're screwing over a bunch of early sellers, so on and so forth. How many of y'all have like looked to enter off of an order block and then price just like blows through it and it just doesn't respect it at all, despite all the confirmations being there? Just out of curiosity in the chat, you guys let me know, okay? Because sometimes this will happen and then we'll be confused as to how we can go about approaching that kind of a scenario. And this happens, from time to time and on a regular basis. Okay. Sometimes, this is the outcome of our trades, right? We'll look to, so many times, a lot of people, okay, can relate to that. So a breaker block is essentially put a failed order block. So I mean, this might not necessarily be the best example, and I have actually a better example to show you guys. But if, this was, let's say we were bearish, right? We're creating lower lows, lower highs. Here's the new order block, right? From this side of this low. Assuming price came back into it, people will probably be looking to sell off that, but then price trades through it, okay? That failed order block then becomes a breaker block. And so the best example, and we're going to look at a couple of diagrams for this, is this right here. Okay, and we're going to look at let's look at the bullish one first, actually. Let's look at this one first. So can you guys see this? Can you guys see that? Yeah, you guys can see that, right? Okay, cool. So this would be an example of a bullish breaker block, all right? There's a difference between an order block and a breaker block. This is really important, okay? Notice how we're in a downtrend. Price expands, we create a lower low. We then retrace, we create a lower high. Price then trades to trades to the downside, we create a new lower low. Notice how I have this marked up, break of structure, okay? A break of structure is an expansion outside of the range, continuing the trend. A market structure shift is when we break out of the range, reversing the trend. So here, we're in a downtrend. We then see a market structure shift, and this order block, because this would initially be an order block, right? Last up candle before a down move, gets traded through, okay? That same initial order block, which then becomes a failed order block, now becomes a breaker block where price broke to the upside, didn't respect it, and we anticipate price to retrace into it still. But now instead of looking for shorts off that area, which we would have been looking for initially, we're actually looking for buys out of that same area. It's kind of like how sometimes with break and retest traders, that resistance becomes support or that support becomes resistance. Basically the same ideology, but with order blocks. Okay, so, and it's really important to distinguish that for a bullish breaker block, there has to be a lower low, lower high, lower low formation. All right, if this down here, instead of it being a lower low, let's say it was a higher low, that is considered a mitigation block. And there's a difference between these two things, and we'll show some examples of each. Okay, but this is really important. Make sure you guys are writing this down in your notes because this is the entry. You're actually going to be basing it off of that last, up candle prior to this down move that wasn't originally an order block, but price failed to respect that order block. We end up trading through it. Okay, so a failed order block becomes a breaker block. These personally are one of my favorites to trade. And the reason for that is because sometimes order blocks don't capture liquidity. We talked about it when we were looking at some examples that the ideal scene is for an order block to capture liquidity, but they don't always capture liquidity. If we look at this, and we take this diagram as an example, there was no liquidity capture to the left, right? We then see price trade to the downside, which this ultimately is a liquidity capture. Okay, when we're creating this kind of breakout to create a lower low, that is a liquidity capture. Price then reverses. We get the market structure shift. Price retraces back into that original order block, then turn breaker block, and we look for buys to continue riding that thing higher. Okay, so this is a bullish example. If we look at the inverse, this would be a bearish example. All right, so we're in bullish trending market. We got a higher low, higher high, higher low, right? We break structure, creating an expansion, continuation of the trend to the upside, higher high. Here's your order block, right? Last down close candle prior to that up move. But when price trades into it, we trade right through it. There's no slowing down. We just trade directly all the way through it. Failed order block then becomes a breaker block. We expand it out and we can look to take shorts, right? There's your entry. There's your little target, okay, for entry, where you would then be taking sells and targeting some form of liquidity to the left. All right. So again, biggest takeaway here for breaker blocks is look for order blocks that failed. Failed order blocks become breaker blocks. All right. And a very key distinction between breaker blocks and mitigation blocks, because we're going to get into those next, is that a breaker block is creating that run on liquidity. We're seeing the break of structure prior to the market structure shift and entry off of that failed order block. All right. And we'll take a look at and compare two examples of a breaker block and a mitigation block in a little bit. Okay. But okay, so let's take a look at an example of this. All right. So let me see here. I think I had one. I think, yeah, gold kind of gave one as well. Similarly. So if we were to take a look a little bit closer, this same example is really clean because it kind of gives both. It kind of was like an order block and a breaker block both in one, which, it's just lots of confluences for us to be looking and kind of having that confidence in a high probability setup. But this same example that we had for an order block, right? Here's your order block. You got the last up close candles prior to a down move. But then inversely, you also have a breaker block here. If we zoom in on this a little bit here, we can see that we have right, obviously we're trending to the upside. There's little waves within waves here. We have a last down candle prior to a push higher that creates a new high. But then instead of us getting a bounce off it, we just end up selling right through it. What else do we have in addition to that? There's also a fair value gap that's formed in the same area as the breaker block. Okay. Check this out. Fair value gap right in alignment with that breaker block. Now, this failed order block, the way we would look to enter off this is we're going to be looking at mainly, personally, this is just the way I look at it personally, is I'll look for the confluence. If there's a fair value gap, that's like the best and kind of most ideal scenario, because I'll look to take my trade off the fair value gap in alignment with the breaker block. Okay, but you can look for basically, you can take the close and the 50% of that breaker block. So that's kind of what we would be looking at for this example. If I just delete this real quick, you'd be taking a look at the close of the candle and the 50% of it. All right. So if we were to extend this out to the right, this is how your entry might look, basing off of the breaker block instead of just the order block. Sometimes you'll be able to see the two kind of lined up. It's not always going to look like that. That won't always be the case. But we could say, let's say we want to take it off the kind of 50% of that fair value gap, which just so happens to be in alignment with the close of that breaker block. And this is, we had as a vocabulary, right? Buyers and sellers remorse. Okay. If we just look this up really quickly, what is buyer's remorse? Buyer's remorse is a feeling of regret experienced after making a purchase, typically one regarded as unnecessary or extravagant. If we were to take that and apply it to the charts, it's kind of like, imagine anybody that took buys. If we go back in the replay mode again a little bit further here, anybody that took buys out of this breaker block, or what was now considered a breaker block, but originally was looked at as potentially an order block, anybody that was taking buys in this area, they're just hoping, fingers crossed, that price comes back to that area so that they can close out their buys, because clearly, there's no chance of them being profitable when they see that prices sold off so aggressively through their area. So they might still be holding that position instead of having a stop loss, which we always preach the importance of having stop losses here. But a lot of retail traders don't trade with stop losses. They're kind of just trading off of emotions and without a real strategy. So any sort of buyers, right? We see last down candle prior to an up move, price retraces into it, they're taking buys, right? Same thing, inversely for not trading smart money or market maker methods, right? Resistance becomes support. People are looking for this bounce. So there are buyers that are entered in from that breaker block that are just hoping, fingers crossed, hoping that price comes back into that area just so that they can break even instead of closing for a loss. They're looking to mitigate their position, but instead of them being smart like the banks who are hedging their way into the market with buy to sell, they're just in a losing position that they're trying to close out or break even. Okay, so buyer's remorse, this is sometimes referred to, breaker blocks are sometimes referred to as remorse candles, where you have people that have taken buys out of that, last down candle prior to up move, right? Area of quote unquote resistance turned into support. They're just waiting, they're hoping and praying that price comes back to that area so that they can close out for break even. It's a buyer's remorse area. So in playing this out, let's just play this thing out. We'll see that price comes back up, and this is like a triple whammy in terms of what's happening here. This is why the sell was super clean. I wasn't up for London session when it played out. But take this in. Look how beautifully and more refined the entry actually becomes here, taking it off of the, okay, it's like still playing just by me hitting pause here, but we're just really seeing how far this thing went. Okay, cool, there we go. Notice how a little bit more refined this entry is in comparison to just taking it off of the order block. Right, that order block we looked at was on the hourly time frame. It was the last up close candles, which we can see there's two of them on the 15-minute, prior to the market structure shift and down move. But more refined, we have the breaker block and fair value gap, where price comes basically right into the close of the breaker block. The 50% of the fair value gap is in line with that. Look at that sniper entry. Look at this sniper entry. This is crazy. I mean, we got to go ahead and just put that little target thing there. I mean, that is just clean, man. Clean. So we weren't, personally, I wasn't awake for London session to take that sell, because I was right at 3 a.m. London session opens. We see a beautiful reaction. But we were, and this is what we talked about on Thursday, we actually were in a position where we talked about price returning into this area for sells, and I believe it was the hourly time frame. That's what we were basing sells out of here. So this was the re-entry that we caught to then really see price sell off aggressively. This is the area we talked about at least on Thursday. We didn't catch it live because it came in at like 10:45. We ended the session like a few minutes before price actually came into that area. But this was an additional kind of stacking opportunity to take an entry if anybody wasn't awake during London session. There's almost always going to be re-entries offered. You just got to know where to look for them. But this would be an example of a breaker block. So here's a couple of things to consider, and this is something to consider in regards to any order blocks, breaker blocks, mitigation block plays. You want to look for really these key things, which number one is ideally, because sometimes there isn't with like an order block, you want to see liquidity captures. All right. You want to see market structure shifts. and you want to see fair value gaps. These are like three things, and we're going to be talking about this more on Wednesday. We're actually going to go through kind of what the A+ entry models are for market maker methods and just turn a bunch of you guys into absolute snipers that are going to be taking these trades, looking for these setups and identifying them with ease in no time, literally. You know, anybody that's on these sessions for the right amount of time and is really dialing in and applying what they're learning, you guys are going to be in a position where you're taking trades independently in the best possible way, like zero drawdown entries, exactly like what we talked about and shared on Thursday. Not every trade is going to be a winning trade, of course, but I'm talking, hey, the ones that are winners, very little drawdown, great risk to reward ratios. You know, even just this one, the first initial one out of this breaker block, if we were up at 3 in the morning, 1 to 2 risk to reward, just targeting a new low, not including, you know, the rest of this drop. I mean, this thing tanked. Okay. This one right here, the entry that we had was based out of the 50%. Stop loss, I think, was just above this high here, targeting a new low, 1 to 3 risk to reward. So the stacked entry was actually a better risk to reward than the original entry. So, I mean, this is the goal. The goal with these sessions is to give you guys the tools to go out there and identify setups like this, to pull trigger on setups like this and be absolute snipers in the markets. That's the goal ultimately. I have people that reach out all the time and like, man, like, why didn't you share this trade idea on Solex? And to be fair, you know, they got a point. I probably should have. I did talk about it. We spent a lot of time on it on Thursday morning's live trading session. So there were people that managed to capitalize on that position, despite it not being called out on Solex. And I'll be honest with you guys, like, my goal is to teach you guys how to fish. If I can give you all some fish along the way, fantastic. But the ultimate goal is for you guys to be completely independent and have the tools and resources that are necessary to just be phenomenal and profitable traders. Right. So I just want to share that. But so that's the breaker block. Okay. Let me jump over to the stream here and see what we got. See what we got in terms of interaction. So again, any questions, drop them in the Q&A section because there's a good chance I'm not going to catch them in the actual chat. You'll see a button that says Q&A. Can this strategy be used with Monara? Yeah, for sure. I mean, you can use this in confluence with any other products or tools on the platform, for sure. There might even be another tool that you know might be able to use this with, but I might have. I didn't say that. We'll see. We'll see. We'll see what the future holds. Lots of exciting things to look forward to. Okay. Let me see. How long is this live? Ollie, brother. We do these lives for usually about 2 hours. So sit back, relax, grab some popcorn. We're going to be having a good time. Here 40 minutes early. You're here 40 minutes early? Well, hopefully you got some popcorn then, man, for sure. It's kind of like the pregame, you know, the not the pregame. Well, yeah, sometimes a pregame show or whatever. You can, you know, have your snacks and everything. It makes me think of like a movie theater. You're like eating the popcorn while you're watching all the advertisements and everything, waiting for the actual movie to play. We got Rhode Island in here. What's going on, Nicole? Going to be an interesting week again. Yeah, for sure. Okay, so let's see. Where would I TP be with breaker blocks, or we target liquidity? Always looking to target liquidity for sure. 12 a.m. Yeah, y'all that are out in the UK are just out here. You're just out here. I love to see it. The dedication is awesome. What's going on, Megan? Is that the Italian flag? I might be super uncultured, but I think that's Italy. Dang. What time is it in Italy right now? San Diego. Let's go, Logan. What's popping? Ireland. Oh my gosh. I'm clearly uncultured. Terrible. That was awful. I must be either fired or retrained for that one. That was brutal. I was like, is it Italy? Okay, to be fair, they're kind of similar, to be fair. But you guys can definitely fail me on that one for my my flag ability. Okay, so all right, let's continue. So let's talk about mitigation blocks. All right. Um, Mitigation blocks are very similar to breaker blocks, but the difference, and we're actually going to draw this out because I didn't actually make um, a diagram prior to the session. I'll share my screen in a second for you guys. Let me just pull this up. So, and to be honest, my preference is going to be breaker blocks over mitigation blocks, but there's still, validity or things to look for with mitigation blocks, and there is a key difference. Okay, I don't understand fair value gap, so we can talk a little bit more about that. I'm just going to finish up this training on the different types of order blocks quickly, but I can come back to that. If you can do me a favor, Samantha, drop that in the Q&A section so I can come back to it after this training and I don't forget to address that. So let's talk about the difference between a breaker and a mitigation block. Okay, so this diagram, which we already pulled up on screen and went over and showed an example of for a bearish breaker block, the only difference, okay, between a bearish breaker block and a bearish mitigation block is that one captures liquidity and the other one doesn't. So instead of us seeing a, let's say we're bullish in market structure, creating higher highs and higher lows. Instead of seeing a high, higher low, higher high market structure shift, failed order block becomes your entry breaker block inversely. We see a high, higher low, lower high, price trades to the downside. We see that change of character, and then price comes back into this as a potential failed order block prior to trading to the downside. Okay, so that's kind of the difference between these two. They're very similar, but instead of us seeing a break of structure where price expands and continues, oh man, here I am opening stuff again. Instead of us expanding to the upside, breaking structure to create a higher high, we don't see a break of structure. We don't see a break out of the trading range to the upside. We just see price come in, eliminate. This higher low becomes a failed higher low. We see a change of character and market structure shift beneath this, ideally, and that becomes the same kind of entry model before riding the price lower. The reason that I don't love these personally is because we don't see a liquidity capture. So as I mentioned, with order blocks and also with mitigation blocks, there won't always be liquidity captures. And the ideal, most opportunistic, and most probable setups include a liquidity capture. Okay. We see a liquidity capture to the downside, but if this is an order block that we're looking to take a trade off of, or a mitigation block that we're looking to take a trade off of, one factor that we have to consider is that there was no run on upside liquidity here, last side liquidity, prior to the market structure shift. So this is still a viable play, and you can still look to enter based off this. It might look like something like this, right? Last down candle prior to an up move that fails to create a higher high. Price then creates a lower high. We see price trade to the downside, and we see a market structure shift when price trades beneath this low. Okay, this would be a change of character when price trades beneath this low. But market structure shifts officially when we come beneath the previous higher low. As price retraces, you can look to take sells out of that failed order block. And this would be considered a mitigation block. Stop loss would be above this high, and then targeting some form of liquidity to the left or a fair value gap, so on and so forth. Okay. So one thing I did want to talk about and mention with this is these are viable entries if you have divergence between correlating pairs. We haven't talked about this yet. I wanted to save it for this session because this is important. And it's just kind of an additional, it's like a tertiary confirmation. And it's something that I would say is probably worthwhile considering when you're taking trades, but it's not necessary. It's not absolutely going to be a make or break of whether or not you should take the trade. It's just something that can add a nice confluence to your trade, is looking for what we call divergence. So an example, hopefully I have a screenshot of this in here. An example of this would be, do we have, hold up. Let me see if I can pull this up and then I'll reshare my screen. So I think I have it. I think I just got to grab it from my Telegram messages. Do we have it? Yes, we do. Here it is. Okay. Beautiful. All right. Let's pull this up. So divergence is kind of like what we're seeing here on screen. Okay. So you have two correlating pairs, something like Euro USD and GBP USD. These are correlating pairs, very similar to how AUD USD and NZD USD, right? Aussie and Kiwi, as sometimes we'll call them, are correlated pairs. All right. Why are they correlated? Because they're both being traded during the same session against the dollar. We could say that Euro JPY and GBP JPY are also correlating pairs because they're trading during the same sessions, both against the Japanese yen. Euro USD and AUD USD wouldn't be as correlated as Euro USD and GBP USD. Why? Because they're not technically both being traded with the most volume at the same time. The Australian dollar is being traded during the Sydney and Tokyo session, primarily, mainly the Sydney session, whereas Euro is being traded mainly during the London session and New York, of course, because we're looking at the dollar here, which is being traded a lot during New York session. So I actually have, oh man, let me see if I can find this cheat sheet real quick, because this will be a good one for you guys to take a snapshot of. Let me see if I can find it. If I don't have it, it's all good. But there's actually a list of correlated pairs you guys could take a screenshot of. This would be one of the things I probably would recommend you to take a screenshot of instead of writing it out, because it's a lengthy one. Yeah, here it is. Oh man, we're going crazy today with the cheat sheets. Okay, check this out. So are we good? Is the feed good? Is this happening for everybody? I'm just seeing what you dropped in the chat there, Bart. You guys let me know if I'm shaky on connection or not. It's been good for me. Good for me. Okay. Sorry to hear that, Bart. It might be, yeah, I'm not too sure. Sorry to hear that, man. My crash had to switch to my laptop. Maybe try switching devices potentially. Hopefully that helps. Okay, so this is it right here. So take a picture of this. I mean, this is an old cheat sheet, so I would say mainly focus on. Yeah, I mean, this is good. Yeah, you can take a picture of this. So we have the futures so Canadian futures. It's very similar to like the DXY, which is the dollar index, similar to the Canadian dollar futures. There's 6C1 exclamation mark. That's going to be correlating with the Canadian dollar pairs. And then you got a list of like specific currency pairs that would be correlating. So Euro USD, GBP USD, Euro JPY, GBP JPY, Euro CAD, GBP CAD, Euro AUD, GBP AUD. Okay, so there's a whole list of all kinds of different correlating pairs, right? Gold and silver, of course, correlating. Bitcoin and Ethereum, of course, correlating. You got S&P with US 30. You got NASDAQ with US 30. S&P and NASDAQ also correlate, but that's not technically one of the ones in here. These are like a trifecta. It's like the trifecta. These three correlate very nicely. So the reason I brought that up is when we're considering divergence, what is divergence? Well, it's when one of two correlating pairs, which typically will give the same exact market structure, where whenever one's making a higher high, the other one's making a higher high. Whenever one's making a higher low, the other's making a higher low. A bullish divergence would be where you have something like GBP USD, creates a lower low, whereas Euro USD creates a higher low. Okay, what would the difference be here? This is a mitigation block. This is a breaker block. All right. Why is one a breaker block? One's a mitigation block. Well, one creates, here we're creating bearish structure, right? Lower lows and lower highs consecutively. Price then comes in, breaks the previous order block. So your entry would be based off of that if we're looking to take a trade off the breaker. But I would actually favor buys out of the mitigation block here because that would be a sign of strength for the euro. So if I'm looking to take buys, I would actually favor the correlated pair that makes a mitigation block instead of a breaker block, because one ran on liquidity, taking out previous lows, whereas the other one didn't have enough strength to capture the liquidity and created a higher low instead of a lower low. And that would be a sign of strength for euro. And so buys would actually make more sense out of the mitigation block, which would be right here. All right. And your stop loss could be beneath this low or this low. All right. But this would be a sign of strength, and euro would make more sense for buys. A bearish divergence is the same thing inversely, where you have one of the two correlating pairs that goes and runs on liquidity, creating a higher high, whereas one creates a lower high prior to a market structure shift. All right. So mitigation blocks, I don't usually play them unless we have this. Sometimes this is referred to as SMT. Smart money, I think it's smart money tactics or something like that. I just refer to it as divergence. It's the easiest way to understand it. So let's take a look at an example. Okay. Let's take a look at an example. So, okay, cool. I think we covered all the vocabulary so far for today. Mitigation blocks, we've gone over that. Breaker blocks, we've gone over that. Remorse and mitigation, cool. Yeah, we're good on vocab. So check this out. If we take a look at GBP USD and Euro USD, and for those of you guys that didn't know, you can pull up two charts on the same screen. If you go to the little plus sign top left corner, I believe you could do this on the free version of TradingView. I might be mistaken. Maybe it's only the paid version, but I think you can do it on the free version as well. Have fun with it. Try it out. See if you can. But click this compare or add symbol, and then you can pull up two correlating pairs. And instead of just clicking, you want to make sure that you go and you click new price scale. So I'll put a price scale on the left-hand side, and now I have both Euro and GBP USD on the exact same chart. Now you can look at the line charts together, and you can kind of gauge which one's stronger or weaker than the other. Or you can look at both of them as candlesticks. So it might look a little bit complicated and kind of crazy, but sometimes it's nice for taking a look at the differences between the two. Like, for example, right now, we have Euro USD in the red and green candles, and then we have GBP USD in the black and yellow candles. So take a look at this. Okay, we can see that for Euro USD, we're creating these higher highs and higher lows. All right, just as GBP USD is creating these higher highs and higher lows. All right, just about every higher high and higher low is in sync with one another. But take a look what happens here. GBP USD goes, and we see a market structure shift. All right, and now here we are. Euro fails to break beneath this low. We're kind of creating equal lows, which gives you the evidence that, hey, we're probably going to see, a run on these lows at some point, right? There's definitely liquidity to the downside here. Okay, but which of these two is weaker? GBP USD is weaker at the moment because we actually came and we have seen already that market structure shift. So in this scenario, this is kind of inverse to what I was just talking about. Actually, I was going to show you an example of where a mitigation block would be more favorable. In this case, I guess you could say the inverse would be more favorable, right? You want to be selling the weaker or buying the stronger when there's divergence. So the divergence takes place when we have two correlating assets. One creates a higher low, whereas the other one creates a lower low. So if I'm looking for buys, I would want to be buying Euro USD. But because we've anticipated and we're seeing potential sells here, we've seen a market structure shift on GU. That could just be a run on liquidity for price to go higher. I don't think that's the case, and we're going to get into market outlook in a second here because we're almost done this training. But take a look at this, right? And this is actually one of the things that I'm actively looking for sells, because both of these are setting up for potential sells, Euro and GBP. Here we have a last down candle prior to the creation of a higher high. This at one point was an order block. What do we talk about for breakers, right? A breaker block is when you have an order block that fails to provide support to create an expansion. Okay, so we drag this out. This is a breaker block presently. All right, what do we have in alignment? And this is the 4-hour time frame. What do we have in alignment with that breaker block? We have a fair value gap, literally overlapping it. Okay, literally overlapping it. So why would I want to be looking for sells on GBP USD instead of Euro USD? Well, clearly GBP USD is weaker at the moment. Doesn't mean that Euro is not going to be taking lows and looking for potential sells to play out, because there's a ton of liquidity beneath these lows. We can definitely acknowledge that. But because of the price action we're seeing, look how much more aggressively GU sold off in comparison to EU. GBP USD is probably weaker than Euro USD. In fact, not probably, it absolutely is, because we've seen the creation of a lower low versus Euro USD. We haven't seen a creation of a lower low yet. So right now, both of these are in the phase of potential retracements to ideally continue lower. So one thing I'm going to be looking for and potentially just observing on, ultimately GU and EU is, if we take a fib for this move, we can see that technically the breaker block isn't at a discount. We talked about this last week. We want to see price come to ideally, the 50% or kill zone areas. But sometimes immediately after market structure shift, we'll get shallow retracements into breaker blocks and reject. So even though we don't come to a 50%, we'll come to a breaker block and we'll see a rejection. So I would be just observing and watching this area in real time for potential sells. I would want to watch smaller time frame price action up in here before just taking an entry, because it's not in those discount areas that we like to see. Or maybe there's, on a smaller time frame, the potential for an even better entry that we just haven't seen yet inside these areas, breaker blocks on the smaller time frames, fair value gaps. I mean, obviously there's a fair value gap up here. This is the closest one, the one that we're closest to at the moment. But just something that I wanted to point out and observe, right? Currently, if we're looking for sells, GU is probably going to be playing out more profitably, in that, if we take a look at the movement from this side of this low, we saw 143 pips versus, I don't know if this is going to be accurate or not. Is this accurate? Let's see. 483 to 740, 740. So yeah, this is technically still measuring it based off the GU chart. But either way, we can see that this move wasn't as aggressive to the downside as GU was. So GU is weaker, right? We're seeing more weakness on GU. But I wouldn't just blindly take a sell off this because it's not at a discount or a premium in this case. If we're taking sells, we want to be selling at a premium. So, but nonetheless, this is just an example of something that you could consider. But divergence, correlation, something to definitely take into consideration with your trades. And if you were to see a scenario where you had a divergence at a high or a low, where reversal could take place and we saw the divergence kind of being inverse. So right now we're seeing the divergence here where one has created a lower low, whereas the other one's created a higher low. If we saw the divergence to the upside where one created a lower high, whereas the other one created a higher high, that's the kind of instance where you would see a bearish mitigation block as being more favorable because this one's showing more weakness because we didn't actually go and run on the liquidity. Does that make sense? It might take a couple more examples, and maybe we'll take a look at some other ones on Wednesday as price continues to play out and develop for this week. But let's jump back over to the stream here. So, okay. Feed's a little bit shaky for a couple others, it looks like, as well. But hopefully you guys got me for the most part. Okay. So we're going to be doing some market outlook really quickly. I'm going to address some of the questions in the chat. So first one that we have here, can you explain the difference between mitigation block and order block? So there, I mean, the concept behind them is fairly similar in that we're seeing the institutions being able to break even on positions. But I think the biggest difference is the fact that mitigation blocks and breaker blocks are both previously failed order blocks. So to re-emphasize this, if we take a look at gold for an example, this we had, and these, I mean, this is just an example where we kind of have overlapping an order block and a breaker block. But here, let's pull up a clean gold chart so we don't have as much noise to be focused on here. So let's delete all that. Okay. If we take a look in the replay mode, here we have 15-minute, 5-minute time frame. We're seeing higher highs and higher lows. You then have this order block, which we technically did play into prior to price trading higher. But again, as prices were tracing, probably people looking to buy out of this, which was a down play that, or a down move that swept liquidity prior to going to create this ultimate swing high. It's even cleaner on the 15-minute as one candle. Okay, so here you have at one point a point of interest. As price comes and trades into it, we don't slow down. We trade right through it very aggressively. So a breaker block is a failed order block, basically. So where most people are looking to take buys, not just because it's an order block, but also, hey, we broke an area of resistance. Break and retest traders look at this as like a, here's the break. We want to see the retest before we continue high kind of thing. We don't see that. Price melts through the area. Okay, it's baiting in buyers, it's baiting in buyers, baiting in buyers as price melts, which allows for price to melt because there's so much buying, taking place in the market based on price action. And so a breaker block is a failed order block, if that makes sense. All right, we have price trading to the upside. We then see a market structure shift. Here you have the last down candle prior to the up move before the market structure shift. Whereas an order block is simply put just that last down candle prior to an up move the price returns into to mitigate and go higher. If we saw this guy would be the breaker block, right? Because we were creating higher high, higher low, higher high, lower low. This was a previous order block that failed. We would look to sell that breaker block. Hopefully that makes sense. But let's see here. What else we have for questions? Yeah, you could definitely use RSI for divergence as well. It's just not something that I use personally, but it would be something that you could look to regard as something for divergence for sure. Like you'll see a divergence in RSI and price action just on one pair. So instead of you looking at two correlating pairs, you'll see that on RSI we've created a higher high, but price created a lower high. That would be a divergence that would be something worth considering. It's okay, no worries, bro. It's all good. It's all good. Okay, cool. What else we got? So Jimena, did that answer your question? Let me know in the chat if that answered your question. So order block without fair value gap doesn't count as a probable, doesn't count as good probability order block, even though there are confirmations. I mean, this is the thing, and we're going to be talking about this in a lot more detail on Wednesday. You might see a breaker block play out without a fair value gap present, but the most opportunistic, the most high probability are going to be the ones that have fair value gaps. Fair value gaps are honestly like the bread and butter behind market maker methods because it's insufficient price action. We're seeing price move so quickly that there's hardly any opportunity for the other side of the market to be offered. Right, we're seeing a sell side imbalance, buy side insufficiency, or buy side imbalance, sell side insufficiency. So any sort of opportunity where there's order blocks or breaker blocks or mitigation blocks in alignment with fair value gaps, we love to see it. That's like the most ideal setups. In the meantime, just while I'm doing Q&A as well, I just posted, it's going to come up on Solex in like 2 seconds here. Just posted on Solex for anybody that wasn't able to tune in live. Y'all know the play. We've done this. I think we've done this on every single Monday session, but whenever we're doing a lesson, I love, and I know a lot of people enjoy sharing their takeaways. So go and drop on the most recent Solex post that I just did. We're about to do market outlook in like 2 seconds. But in the meantime, just as we finish the Q&A, go ahead, drop what your takeaway was, what your cognition was from tonight's session on Solex. And the reason we do this, number one, I love to see the takeaways you guys have. It's great. Number two, it encourages other people that maybe weren't able to see the session live to make sure that they're on the other sessions in the future live if they're able to, or to at least go back and watch the recording, because hopefully, these sessions are of value enough to even being live, go back and watch the recording. But for sure, it kind of just creates that excitement for people that maybe didn't see the session live to go back and watch the recording. So you guys do me that favor. That'd be amazing on Solex. And I appreciate you guys in advance for doing that. And as always, feel free to, post stories on social media being on these sessions. I tend to repost just about everybody. I don't think I've not reposted anybody that's tagged me in a story, on Instagram or whatever the case is. So feel free to do that as well. It means a lot for me because I just love to see students getting value. So appreciate that. I think the post is officially live on Solex now. So yeah, just wrapped up the order blocks training on ECA. Drop your main cognition below. So definitely do that. And share with the family on economy and Solex what your takeaway was from tonight's session. But we're just getting started. I mean, we got the market outlook to go over here, and we'll be kind of out of here probably in the next 30, 40 minutes. Okay. Rio, does that give, that gives clarity on your question though for fair value gaps in alignment with order blocks? Thank you for the training. Yeah, of course. Absolutely. Bliss, this is your first time joining. Amazing. Welcome. Great to have you here. Hopefully it wasn't too wild and crazy and there was some cognitions. I know that sometimes without having some of the prerequisite sessions under your belt, it can be a little bit overwhelming. But a question you have, which I think is really cool, and there is actually a psychology behind them, is there a psychology behind your candle colors? And I'm actually really glad that somebody asked this, because some people think I just love Wiz Khalifa and like black and yellow. He's got like the song and everything. So that's why I went with the candle colors that I did. But it's actually not the reason why. The reason that I have yellow and black candles is yellow and black are not colors that I associate any sort of emotion to when trading. Most people have red and green or red and blue. When you look at a chart and you see red as your down candles, especially if you're in a trade, that's something that can bring up emotion inside of you that might cause you to not necessarily consciously, but unconsciously react in a certain way when it comes to managing your trades. Same thing inversely. If you're seeing blue or green candles print in your direction and you're in buys, you might get excited, but fail to see what's actually going on with price action because the color is creating an emotion inside of you to react to what you're seeing. So yellow and black are colors that, especially black, is a color that creates basically no emotion innately when you're seeing them print on the chart. Now you might think to yourself, well, okay, but over time, if you're using, black candles as your bearish candlesticks, of course you're going to start to associate that with the same thing that you would with red candles, right? But for me personally, it hasn't actually influenced my decision making in any way using yellow and black candles. So that's the reason for the candle colors. You could do white and black, white for bullish candles, black for bearish candles, or inversely, whatever you feel like doing to completely remove any emotion assorted to or associated to any color. I know a lot of people that do that, but that's to kind of give you the answer in regards to that question in terms of the psychology behind my candlestick colors. Nobody's asked that on a session yet, so shout out to Bliss one time for asking a great question, and your first time here too. We love to see it. Okay. So, okay, let's go ahead and dive into some market outlook. So we just kind of went over the market outlook for GBP USD, but there's a few things that I wanted to kind of go over in terms of my outlook for this week. So first things first, and something I want to consider and pull up with you guys is Forex Factory. So for those of you that don't use this platform or you're unfamiliar, this shows all the low, medium, or high impact news events that are scheduled and set in stone for the week prior to being released. So, typically, I'll only really consider orange and red folders, which are high impact expected and medium impact expected news events. So I'll usually just apply it and look like this. And we can see that Monday, we had literally nothing going on today. Still a pretty, for the indices at least, we saw some movement today, but nothing really too crazy. Tomorrow, also not really a whole lot going on. There is some news for the dollar at 10 a.m. But Wednesday is like the day. Wednesday and Thursday are the 2 days that I'm looking forward to most this week because they have the most red folders. A lot of people will ask me sometimes, or let me rephrase that. A lot of people will sometimes ask, do I focus on trading high impact news or do I avoid trading days where there's high impact news? And the reality is, news is the excuse. Jess talks about this on her stock option sessions. Shout out to Jess one time. She crushes trading stock options. And I'm not sure if any of you guys have checked her out or not, but I would highly encourage it if you haven't. She preaches this as well. The fact that news is the excuse for the market to do what it was going to do anyways. The technicals are really what you want to base your analysis and your entries off of. The news is just going to give you that momentum to kind of drive or see the market drive in the direction where it was already intended on going. And so us in a position to anticipate that movement is going to be based on what we're seeing with the technicals, right? So we can see that Wednesday, there's a ton of Euro news. Even more importantly and more significantly, we have the interest rate, which is anticipated to be cut for the Canadian dollar. So Canadian dollar pairs are actually going to be on my radar screen this week. We're going to take a look at a couple of them. But this is most likely, if this ends up being as forecasted, we'll have to see and gauge it based on technical analysis to really have confidence in whether or not this is going to be as it's forecasted, because sometimes it's not. But I would actually be confident that we are going to see this as forecasted and be an interest rate cut, which would be bullish for the Canadian dollar. So that's something that we're going to take a look at. We're going to look at some Canadian dollar pairs, but lots of news. We even got GBP news in here, red folders. And then, of course, we got Thursday morning, which we'll be trading just after this, the unemployment claims, as well as the advanced GDP. So Friday, a little something light, nothing too crazy. We do have G20 meetings, though, as well as on Thursday as well. So something to consider. But nonetheless, Euro pairs, Canadian dollar pairs for currency pairs specifically are probably going to be more on my radar screen than anything else. And so, yeah, with that being said, let's do some outlook. First things first, talking about gold, just because we've been talking a lot about gold on sessions recently. Ultimately, what I want to see right now with gold is, ultimately we've seen price trade into almost every fair value gap that's kind of relevant right now, with the exception of this one right here. Okay, we can see that this, fair value gap, buy side imbalance, sell side insufficiency has not been traded into yet. And we actually do have a, imbalance, a fair value gap right here that I'm interested to see if price can trade back into this week for potential sells. Because right now, if we're taking a look at, intraday time frame, order flow, we're definitely flowing more bearish than bullish at the moment. We can see that, what progressively took us a while to come and create this high, we've pretty aggressively taken back in a shorter period of time, which is one thing that would give me confidence that we're seeing some more weakness on gold right now to look and maybe favor shorts as opposed to buys, right? Sells as opposed to buys, at least for right now. And so daily time frame, we've got this imbalance. We got this fair value gap. What is a fair value gap? I know that was something that somebody asked, or having a deeper understanding of that. It's when there's really three candles you take into consideration. You have the first candle, you have the second candle, which is the one that creates the fair value gap, and then you have the third candle. Okay, and all you're looking to see is, do we have candlestick wicks that overlap each other here? And that would be healthy price action where we're seeing both buy side and sell side offered in that area sufficiently. Here we can see that we have this candlestick, which wicks up to around 24.11, 24.12 in terms of price. We have the first candle, which trades down into 24.40. So this whole area on the daily time frame, we don't see an overlap of wicks. And so the anticipation would be for price to come and offer buys in that area, so we can kind of see that gap filled in. Okay, so that's something that I want to see on gold. I'm confident we're going to see it probably tomorrow or potentially Wednesday, if not tomorrow. But we can see that, this candle here, this was actually, 21st was, yesterday. So you see market opens, melts to the downside. There's no wick to the upside here, which is also something that I would want to see price come and create. Sometimes when we'll see candles that don't have a wick to the up or downside, you can look for price to come back to those areas. And so this is the daily time frame fair value gap that we have drawn out. We can see that there's more refined. We have Sunday's fair value gap here. And then there's also, surprised on the 4 hour as well. Yeah, there's also this fair value gap here, which are both inside the daily time frames fair value gap. So there's reason for us to trade to the upside here and just fill those insufficiencies, as well as capture liquidity. I mean, there's definitely a lot more sellers in the market right now than buyers. And so it would make sense for this high to be captured, potentially even this high as well, and just take out any sellers that have stop losses above those areas before we continue lower, while also baiting in buyers inversely. As we're seeing price come and take out those highs, a lot of people are going to be looking for buys to ride this thing higher. But really, I'm just looking at this as runs on liquidity to then go lower. And then we'll see kind of these higher highs and higher lows used as liquidity on the flip side. So that's something that I want to see on gold this week. I could be wrong. Maybe we just continue selling from where we are right now, but we've certainly captured, buy side liquidity here, or sell side liquidity, I should say, downside liquidity, however you want to refer to it as, while also filling in a previous fair value gap. So that's significant to me. I think we're going to get a bit of a bounce going into tomorrow and Wednesday. And the ideal scene is for us to come up in here and then create some sort of schematic on a smaller time frame to take potential sells. And so in alignment with this, something that we could take a look at and consider is, here we have previous area of, as a point of interest, right? Last couple of down candles prior to an up move. Okay, we then see price come and give an initial bounce off that area, but ultimately it gets disrespected. It's a little bit spread out. It's not the most ideal for what you would want to see as a breaker block, but previous order block, which then fails to support price, we break through. What else is in alignment with that? fair value gap, okay, at the fill of a daily time frame fair value gap, this would be an area of interest for me to potentially take sells from. Okay, so this is something that I'm looking for on gold this week. If it ends up being called out on Solex, great. It might not be, so just keep that in mind. You know, should price trade up into, we'll call it 24.32, in between 24.32 and realistically, we wouldn't want to see this thing trade beyond 24.45 if this area was going to be respected. I'm going to set an alert on both of those areas. That's somewhere I would potentially look to consider sells. Okay. Another reason I like that area for sells is because if we were to fib this out, you know, it's right in alignment with that kind of equilibrium, like 50% of this whole move lower. And I mean, we could see price come deeper. I'm okay if we come into this. We can still potentially see price come deeper in this retracement. I think it's possible. So that's why I'm looking for potential sells depending on price action in that area. Excuse me, maybe going into like Wednesday. We'll see that. I mean, maybe tomorrow, but probably more likely to see it on Wednesday. So that's one thing I'm looking for on gold. If we take a look at the Canadian dollar pairs, because that's something that I wanted to focus a little bit more on just in terms of what we're seeing for news this week, right, with the interest rates coming out. USD CAD. Okay, USD CAD, beautiful run on liquidity over here. This is actually an area we were looking for potential sells out of a couple weeks ago to continue lower. Just ended up being a run on liquidity. You can see price prints very bullishly. Just taking a look at this on the daily, we come into, this is obviously a visual gap for market open. We end up trading through that. Price, breaks out of the accumulation. There's a fair value gap left behind here that ends up being traded into. Okay, we come into that. We don't quite get to the 50%, but nonetheless, trade through it, trade to the upside. We just captured these relatively equal highs, and I do see this as being kind of low-hanging fruit for USD CAD to come and run the next couple of days. The thing I'm most interested to see is if we do end up getting a cut in the interest rates, that would be bullish for the Canadian dollar, which would mean that we would want to see USD CAD actually give some bearish movement. So I'm curious to see, we just took out this liquidity so we can change this. I'm curious to see if we can get something like this. Maybe not that aggressively to the downside, but enough for us to maybe see a poke above this and then get a retracement for this move from this low to this high. That's kind of what I would be looking for on USD CAD. And I mean, obviously we're in a big area of potential reaccumulation here where I do think ultimately these highs are going to get targeted eventually. But just looking again at low hanging fruit, that's the weekly time frame. So it's going to take some time for us to see that, maybe a run on this high, price develops and gives selling opportunity. That's kind of something I'd be looking for on UCAD. If the news doesn't come out as expected, that might be the catalyst for price to, run for those highs, right? Because, I mean, if we don't see the interest rate cut, which is being forecasted, we kind of get that bamboozle where it's like, hey, we're forecasting interest rate cut and then it doesn't happen. Interest rates remaining the same. That actually might be bullish for USD CAD, and that would give us potentially enough momentum to come and sweep this high as well. So both of these are areas of interest for price to come in and be kind of magnetized towards, being that there's a lot of liquidity to the upside. So yeah, how can we position ourselves accordingly? Well, again, me personally, based on this whole kind of bullish movement that we've been seeing, there's not a whole lot I'd be favoring in terms of buys right now. We literally opened on Sunday night. We've already traded through and taken these relatively equal highs. There's this fair value gap to the downside. This one we already traded into, basically filled. So there's more liquidity to the upside right now than anywhere else. So I'm confident we're going to see price trade to the upside and capture this liquidity. And the question is, are we going to see some sort of a schematic up here, distribution, that gives us the opportunity to take sells? Okay, I'm not just looking for price to trade through this high and take a sell. All right, I want to see what does price action do on the smaller time frame inside these areas, giving us the potential opportunity for sells, assuming that price develops in a way where we can still be confident that we're going to see that interest rate cut, which would be bullish for Canadian dollar. All right, so that's something that I'm looking for, and obviously there's no firm entry opportunity given there, but that's just a bias that I'm kind of waiting to see how things play out over the next 24 to 48 hours. I think by tomorrow we'll kind of know, okay, cool, this high's been taken out, this high's been taken out. Are we starting to see that distribution? Are we starting to see the smaller time frames give market structure shifts? Maybe we see something like this where it's like, here's a high, here's a higher low. Maybe we create a higher high, and then price gives or alludes to the fact that we're going to come and shift this structure, giving us a selling opportunity to then ride the wave with that news to the downside and potentially hit a nice 1 to 5 risk to reward ratio trade. That's kind of what I'm looking for on UCAD. I could be completely wrong. Maybe the news doesn't release the way that I'm anticipating, but right now we're in a place where we just need more price development. We need more price action to unfold to give us that confidence. But I still wanted to go over that because I am confident that we're going to see this. It's just going to be a matter of, is it something that we get an entry opportunity out of? That kind of thing. So that's what I'm looking for USD CAD. One thing I do like to look at when there's CAD news is CAD JPY as well. I mean, JPY pairs have been doing pretty much the same thing across the board. And inversely, if we were looking for sells on USD CAD because Canadian dollar potentially being bullish with the interest rate cuts, I would want to look for buys on CAD CHF, CAD JPY, because their Canadian dollar is first, followed by a secondary cross pair. So if we were to get buys on CAD JPY, I mean, man, these equal lows are looking juicy down here. So I'm not sure that I would take buys unless we've taken these out. And I mean, that's still a ways away. That's like 100 pips. It's not too bad considering how aggressively this thing's been moving. But yeah, I guess it's not the most. We're for sure going to see these get potentially run on. I would definitely be confident that these two lows get taken out. We might even take this one out from last Thursday as well. But absolutely looks like these lows are going to get hunted. I'm going to set an alert. AUD CAD, I'd be curious to see what we're doing on AUD CAD. So AUD CAD's been printing pretty bearish. What about Euro CAD? What are we seeing? Yeah, Euro CAD's pretty bullish as well. So Aussie is pretty weak at the moment. Low hanging fruit with this wick up here. We might come and hunt this. This is from November 2023 on Euro CAD. What are we seeing on like the intraday time frames? Yeah, lots of liquidity beneath all these lows. Whenever we're in a trending market like this, you best believe that there's tons of liquidity beneath each of these lows. This whole kind of trend line, ample liquidity. So whenever we do get that reversal, if we get it this week, it's not going to be difficult for price to rip through all these lows. It might be more difficult for price to break through this, but even that, there's quite a bit of liquidity. We might just slow down a little bit closer to that. But I think all these higher lows are going to be pretty low-hanging fruit for price to come and hunt. So I'd be curious to see if we maybe run on this high. I'm just going to delete this stuff. Be curious to see if we run this high on EuroCAD. We're about 55 pips from there. And I mean, I guess EuroCAD moves pretty slow because this is the weekly chart. We've seen about 55 pips since market open. So maybe we don't quite reach that on the weekly. Is there other highs that we could potentially, I mean, not really. That's pretty much it. Let's see. Maybe this will be a week that's looking like this, where we see, a pretty massive wick to the upside that captures this high and some sort of a distribution above that area. It's kind of what I would be looking for as well. GBP CAD, what are we seeing on this? Okay, so we're seeing some divergence here. Definitely seeing some divergence. It's nothing really clean, nothing really sticking out to me here. Yeah, so we're gonna have to wait and see. Let's see how price develops tomorrow, and then ideally going into Wednesday morning, we would want to see either entry opportunity before 9:45 or potentially even tomorrow during New York session. We're just gonna have to kind of see what develops with the Canadian dollar pairs. But right now, this is kind of what I'm looking for, considering that we have that news. So what else do we want to take a look at? Euro, right? Because there's a bunch of Euro news tomorrow morning. Or not tomorrow morning, sorry, Wednesday morning during London session. So yeah, London session Wednesday is going to be quite interesting. This is something that I'm looking for on Euro. So even though GBP USD would kind of be the more ideal sells, it's a weaker of the two pairs right now. We can look for sells on potentially both and just watch for price action to develop. But as of right now, we haven't seen the market structure shift on Euro, right? We're creating that divergence where price has created a higher low versus GBP USD creating a lower low. So GU is looking more favorable for sells. But nonetheless, we could probably still anticipate sells on Euro USD here as well. So what I'd be looking for, if we go on the daily time frame, obviously this is an order block on the daily. I'd probably want to see if price can trade to like the 50% on the daily time frame, which is more or less around 109,200. Oh my goodness, that is crazy. Take that in. 50% of the daily time frame is right dead center in line with this fair value gap on the 1 hour. The 50% of the fair value gap as well. Take that in. No coincidence, man, no coincidence. Stop loss would be above this high. This might even be one you guys can put a limit on, to be honest, if you feel called to. We do have a little potential accumulation schematic that's panning out here. But I would see price, I'd be curious to see what price does up in here inside this fair value gap. It's also 50% of the daily time frame, kind of creates that box setup where it's kind of looking like a head and shoulders actually for the retail traders out there that are trading head and shoulders. So maybe be a little bit less appealing just because there's a lot of people that are going to be identifying that. But yeah, even at a 1 to 2 risk to reward, that's within the range, right? From low to high, still within the range. Stop loss would be above this wick. This was from Thursday morning. Thursday morning, we were looking for sells on Euro, and then price just didn't give an entry. Price just ran away without us. We were looking for price to return to this. We came close to it too, but we just didn't get it. But this swift up move, capturing this high and this high, I would be comfortable put a stop above that, which is at 109,370, and then take profit inside the accumulation that we're creating here. because I would be anticipating us for us to take the previous week's low. We got this fair value gap on the weekly. If you look at the daily time frame today, I mean, obviously we didn't do a whole lot. We did take the low from Friday though, so I'd be anticipating, potentially previous days high to get taken tomorrow, and potentially getting this sell. I'd be very curious to see what price does inside this area. So we'll box that up and look for smaller time frame distribution inside that area. You could look to just literally put a limit on this if you wanted to. Obviously, trust your own trading plan and whatever you tend to do. For me personally, I'll probably wait until we get price in that area, because I think we'll get it. I think we're going to get it going into New York session tomorrow, potentially even London session tonight. But ideally, New York session tomorrow, so that I can, participate in it if we get distribution in that area. But if we do see distribution tomorrow, smaller time frame distribution, that's when I'll look to call out a trade idea on Solex. But I mean, I might even just share this analysis from tonight's call after the session as an outlook. Yeah, we just came and we swept these lows. This low remains intact. This low remains intact. So Euro is stronger than GBP, which kind of gives me the confidence that we'll get a deeper retracement from this high to this low as well. And I mean, this is looking crispy. This is looking nice. So that would be one potential opportunity to look for this week. Look for that distribution schematic to print. Something like this is kind of what I'd be looking for on Euro. And then ideally, we would actually target the market structure shift. But just looking at low-hanging fruit, 1 to 2 risk to reward, that's still inside the range at the accumulation. And then there's a reason for us to come lower. We got these lows here. Lots of targets to the downside. I mean, if we were to target these lows, it's like a 1 to 3.5, almost a 1 to 4 risk to reward. And then we got even deeper to potentially come down into, like, even just the top of that range. Whoops. Top of this range would be a 1 to 4.5 risk to reward. So what are we seeing for a 1 to 2? 1 to 2's at 863. One to 3, 694, and then yeah, I mean, back into this range where we had the reaccumulation. It's looking like a nice 1 to 4.5 risk reward. That's just based off of the, what we're seeing, like 50% of this fair value gap, stop loss above this high. We might even be able to get a better entry if we're looking at smaller time frame distribution inside that area. So yeah, something to consider. Obviously, make sure that this is part of your trading plan and you're not just, throwing the limit on there because it's something I'm looking for. If you don't have a trading plan, that'd be your first step. Leaving today's session is to, maybe connect with someone that can support you in creating that. And of course, the educators on the platform. There's lots of educators that teach on trading plans. For me, it's really just, it comes down to having a clear entry strategy, an entry model, and then a clear exit strategy. That's really all it comes down to. Risk management, that's a non-negotiable, of course. But yeah, I mean, this is a nice opportunity. This is like some free game in terms of what I'd be looking for on Euro. But ultimately, I want to see the distro inside that fair value gap, smaller time frame. But yeah. And then let me just, here, let's do this quickly. Try image copy to clipboard. Okay. Let me do this real quick. Do I have a Telegram group? No, I do not. Everything is on Solex for me personally. Okay. I'm just saving this. I'll put this up on Solex after that outlook. Okay. Cool. And then GU. Okay, I'm just checking out the chat. I'm seeing some questions here. So, do you advise I trade with my real account on Wednesday? It's my first time. I probably would not, unless you've got a track record on a demo account to a point of you being confident and comfortable to trade with live funds. But that would be ultimately a decision that you would have to make. Ralph has videos on trading plans. Yeah, Ralph's the GOAT. When it comes to trading plans, he's the guy. He's got the spreadsheets and everything for how to kind of map out your own trading plan. I actually had a student, shout out to Robbie one time. I'm not sure if Robbie's seeing this live or on the recording, based out of BC, British Columbia, Canada. And I've been working with him now for 2 months. I think 2 months or so. He started his first live account a month ago, and he's followed that trading plan from Ralph. Been really, super dialed in with Manara, and had a 75% win rate his first month on a live account, with a 30% account growth. 30% account growth in 1 month, following Ralph's trading plan, and of course, the call outs from the company, and he's crushing it. So that's what it takes, is having a plan, sticking to it, and that's the sauce right there. That's the sauce. How do you get the money icon on my trend line? I can show you that. I can show you that for sure. Thursday is live trading. Yes. Yeah. Thursday I'll be doing some live trading for sure. Some live analysis. Hopefully there's some live trades. We'll see what presents itself. Okay, cool. If you guys haven't already, go blow up that post on Solex. Y'all drop what you got as a takeaway or a cognition today. I think we got a few comments on there, but let's definitely continue to drop those comments on there too, as we're going through the analysis here for the last 10 minutes or so. Okay, so to get that, any sort of text on your trend line, you can go into settings and then click text, and then I just put in $signs, and then I have templates saved. So let's say that you wanted to have a template for downside liquidity. You can go like save as downside liquidity, and then anytime that you're going to be using a trend line to mark up relatively equal lows, something like this, you can go ahead and you can grab that trend line, draw it out as you would, go to your templates, and then click the template, and then it'll put up. You can do the same thing. You can flip it, text alignment, put that on the top for upside liquidity. And then I'll do the same thing. You can do all kinds of customizations with the trendline tool. You can put an arrow on it. If you go style, you can put an arrow to the left, put an arrow to the right. You can do lots of cool things. And I have market structure shift higher high. Looks like this, red line MSS with the arrow. I have the same thing saved for downside. And yeah, it's kind of cool. You can save lots of templates. It's pretty neat. Okay, so that's Euro, and then GBP USD. We talked about it already, but I'll just go ahead and take a screenshot of this for Solex as well. Whoops. Let's delete these two things, which aren't really relevant. So what I would be looking for on GU is for price to come up into that breaker block, which is also inside the fair value gap, and give us a distro to then target these lows. And it's possible that we trade higher. I mean, we could definitely see price come up more, right? We did talk about this, but if we were to fib from high to low, we can see that this fair value gap and that breaker are not in line with the 50%. Technically, I mean, you could even look at this as being a breaker, right? You got these last kind of two down candles that failed to be respected. That is in line with the 50%. Both of those would be considered kind of breaker blocks, right? So, I mean, either way, I'd be curious to see what price does as we're trading back up into those zones. On the hourly time frame, do we have any sort of refined fair value gaps? Yeah, I mean, pretty much the same area. There is a fair value gap up in here if we were to get a deeper retracement. But based on the fact that GU is looking weaker and is weaker than Euro, it's probable that we'll see. Well, let me just write this out quick. Breaker block. Let's go inside to the right. Black text. Breaker already exists. What? Really? Oh, that's not as good of a breaker. I'm going to overwrite that. Okay. All right. So, yeah, I mean, this is what I'm looking for on GU. It's very similar to EU, right? But EU, we'd be anticipating price to give a deeper retracement because it's technically the stronger of these two correlating pairs. So, you got the fair value gap just before the breaker block. I'm not going to give an actual like entry for what you could look for out of this because it wouldn't be as appealing as Euro. But looking for distribution inside that area and then looking to target, these lows is kind of what I would be looking to do. We got downside liquidity here, fair value gaps to the downside. Lots of reasons for price to give us those lows, those creation of new lows. So let me save this as well. Yeah, Eva, if you're from British Columbia, let me pull this up really quickly. We're doing an event in Kamloops. I know there's an event in Kamloops going on with Economy. Myself and a couple individuals are going to be flying out to BC in August. So definitely feel free to connect with me on that. I'll pull up my Instagram just for anybody that wants to connect that hasn't already. This is my IG right here, the one and the only. Make sure it's got the blue check. It's rare that in fact, I don't reach out to people first via DM. So just be mindful of that because there are fake accounts. But yeah, I think we're going to wrap the session up there. I mean, we've been on here for just about 2 hours. Good training on breaker blocks, mitigation blocks, and order blocks at the beginning of the session with a little bit of market outlook in the mix there as well. Donnie Dropout's my Instagram for those of you that want to connect there. And yeah, I mean, that's basically what I'm looking for at the moment. We talked about gold. We talked about Euro USD, GBP USD, as well as USD CAD. So USD CAD's the only one I haven't taken a screenshot of as we've been going through here, but definitely, if you haven't already, do me that favor, go on to Solex and drop, what your main cognition was from today's session with the breaker blocks, with the mitigation blocks. Helps out a ton, and just encouraging people to be on these sessions live or watching back the recordings. And yeah, hopefully you guys got some value with the market outlook as well. We'll be back on Wednesday at 3 p.m. Eastern Standard Time, which is 12 p.m. Pacific, and different times depending on where you're tuning in from. But yeah, had some fun. Hopefully you guys did too on today's session, and looking forward to catching y'all on Wednesday. So talk to y'all soon. Enjoy the rest of the Monday evening, or Tuesday morning, depending on where you're tuned in from. And go get some sleep if y'all are tuned in from Europe. All right, go get some sleep now. But peace and love, fam. We'll talk to you guys soon. Take care, everybody.